India are two great countries in the world, and the two countries have achieved a lot in the last decades. As I said, I'm economist, so we economists like to use figures to deliver our points. So, as you can see, doesn't matter whether you look at two countries in terms of economic growth rates or per capita income or in indicators in other areas. Two countries have achieved a lot. The keynote speaker this morning mentioned China had a head start about 10 years, so has done much better in many areas. But in terms of GDP per capita, either in US dollar terms or in so-called PPP, purchasing power parity terms, both countries now fall into the rank of middle-income countries according to the World Bank classification. India probably falls into the lower middle-income category, China the upper middle-income category, but all fall in the same category, the so-called middle-income. There's another debate about the so-called middle-income trap, and that's something I'm not going to talk about today. Now, the economic growth for 2 or 3 decades has changed the two countries dramatically. I use the word transformation of the two economies. As you can see from the figures, in terms of economic structure, those numbers are percentage shares of GDP in the two countries. Look at the 3 sectors: agriculture, industry, and services. I don't know if you can see the numbers on the screen or not. It's a big room with a very small screen. Just a couple of points. 30 years ago, two countries started with similar structures. The agriculture accounted for about 1/3 of their economies, with the status of industrial sector in China is a bit similar to the status of services in India 30 years ago. Now, 30 years on, in 2011 last year, we see the huge changes, basically the decline of agriculture as a share of GDP in the two economies. In the case of China, agriculture only accounts for 1/10 of the economy. India, less than 20%. Then the major difference between the two economies is really the role of industry and service in the two economies. This audience probably is well known about the success of the service sector in India. So last year it accounts for more than half of the Indian economy, so 56%. And then the major point is really this relatively small role of industry sector play in the Indian economy. I'm going to talk about a bit more on this, the difference between industrialization policies and the service sector development in the two economies. Now, as just mentioned, the two countries are great nations in the world. They have their glorious days in the past. Those numbers are based on the estimates by economic historians. Angus Maddison, he estimated the income share of the two countries in the world. It goes back to a long time in the history. Say I have numbers here from 15th century to, with a little bit of predict the numbers to the next 2 decades. As you can see, in the 15th century, the two countries together counted for half of the world's entire income, about 50%. And then in around the 17th century, 18th century, the two countries started declining. Say India started early, around the 17th century, and then China in the early 18th century. So I call it the falling giants in the last 100 or 200 years. Then their status followed to the pretty much bottomed about 50, 60 years ago, and then only started recovering in recent decades. A few comments on the similarities and the difference between the two countries. The previous speakers this morning already presented quite a lot on the similarity, commonality shared with the two countries. In recent decades, on the economic front, both countries initiated economic reforms. Began in the 80s and then followed in the 1990s. I guess the probably more serious reforms were introduced in China in the 80s, and then some initiatives were adopted in India as well in the 80s. But in more recent decades, two major events: the introduction of new industrial policies in India in the beginning of the 19th century, then China, the famous so-called South China Tour made by Chinese former leader Deng Xiaoping in 1992. Those are really two important points of division in recent history, because the major reform policies was introduced after 1992 in China, similarly in India after 1991. Now, both countries share something that's economic openness, probably more so in the last decade in China. So the openness policy was formally endorsed in China in the early 1990s, but probably more recently in India. I can show you some figures here. This one shows the total trade volume in the two countries. The left-hand side are numbers refer to China. The right-hand side refers to India. As you can see, was already mentioned this morning, there's about 10 years difference in the two countries in terms of economic policies and economic development. If we look at the trade figures, it's very clear here. So as you can see, in 2011, the total trade volume in India was around about $800 billion, while that figure was achieved 10 years ago in China, so around 800 on the left-hand side. So it's a gap about 10 years. In terms of FDI, there's some difference too. Now, if we look at the volumes here, China has achieved the same status as India reached last year, about 2 decades ago. So there's a larger difference in terms of foreign direct investment into two countries. Now, as far as trade is concerned, a 10 years gap, and the FDI about 20 years. Thank you. Now, economists use the ratio of trade over GDP as an indicator of economic openness. The interesting finding in this figure here, the blue one is China, red one is India. The two countries actually, as far as degree of openness is concerned, the two countries are converging in recent decades. As you can see, the two lines about to meet last year. If we can also examine the ratio of foreign direct investment over GDP. As you can see, the last year, the two figures are very, in the case of India, just under 2%, and China, look at the left-hand side, close to 2% too. So, although they started very differently with a huge gap between the two countries, but in recent years, the trend is emerging, is converging in the two countries. Now, that's the similarities in economic development, in trade, and so on. The two countries also have some interesting difference on the economic front. The keynote speaker also mentioned this morning is really the role of state-owned enterprises in China, while the private sector is very active in India. So it's really, I think out of these two sectors in the two countries, SOEs in China, private firms in India. And then the second point I want to highlight is the industrialization in China, while the so-called service revolution in India. And this is another difference in the two countries. Now this, well, I highlight those are the difference in the two countries. These are also potential areas of expanded cooperation between two countries. So I'll come back to this point again. The next point I'm going to focus on the links between the two countries. It's really the core of my talk. The economic links have expanded a lot in the two countries. So it has expanded rapidly, as you can say. This depends on how you measure the numbers, how you collect the numbers. I used the number from the Reserve Bank of India. The red line is India's exports to China and imports from India. You can see a huge gap between the two in favor of China in the last decade. In particular, the red one is imports and the blue one is exports. The gap is getting bigger in recent years. So during the financial year 2011-2012, China became India's largest trading partner. In the meantime, India was only China's 11th largest trading partner. So there's a huge gap for catch up by India. China's exports dominated by manufactured goods, well, particularly machinery and transport. Indian exports are still dominated by raw material, but which counts for 7%, manufactured goods less than 30%. I have more numbers to look at the trade shares by different commodity groups and also the intensity. Basically, figures shows Indian exports underperformed, exports to China underperformed, Chinese imports from India underperformed. These are really two areas the two countries, policymakers in particular, have addressed in the coming decades. Professor Guo from Shanghai just mentioned that those dialogue mechanism. I think this is one of the areas they have to fix it because this huge deficits it's not sustainable in the long run. Also have numbers in the paper about the intra-industry trade. Intra-industry trade is really referring to trade of goods in the same industry rather than trade of goods across industries. There's a difference to highlight here. Some areas there's quite a bit of activities, in other areas there's very little. So we can also look at we talk quite a bit about the competition between the two countries, collaboration. The economists also use numbers to show the areas which the two countries may be competing, but there are many areas the two countries can complement each other, so there's less competition. Bilateral investment is an area which has a lot of potential for expansion. Currently, China has invested about under $1 billion in India, even less in China. So it's, given the size of the two economies and the economic activities of the two countries, these numbers are very, very small, very, very little. So a lot can be done to expand bilateral investment in the two countries. In terms of links beyond international trade, previous two speakers have talked quite a bit about, say, the law order, international relationships. So I'm going to skip this on the dialogue in different areas, different grouping, different mechanism. In terms of international cooperation, some of the names already mentioned, like the G20, BRICS, East Asian Summit, United Nations, and so on. So very briefly on the outlook, just 1 minute, so I should be able to finish. The two countries can enjoy growth and prosperity through competition as well as collaboration. All those numbers can point to this direction. There are complementarities between the two countries. India, for example, there's a lot of scope for manufacturing expansion, while China has still underdeveloped service sector, particularly new services, not traditional services like restaurants and so on. The new services are really referring to IT, to banking and finance and so on. This probably the last table, very interesting, just some very interesting numbers here, really put China and India in a comparative perspective with other major economies, the US and Japan. As you can say, as an economy develops, become mature over time, those numbers are shares of employment and income in the three sectors. the shares of income of employment and the GDP income are more or less the same in each sector, but there's a huge gap between China and India, so it's still a long way for the two countries to catch up. For example, look at these numbers here. The GDP in agriculture, so in the case of US, 1.2, employment 1.6. While China, India, the share of agricultural income is declining, but the employment share is still very high. Now, in the case, I promised to come back to service in India and say the huge share in GDP, well, employment is relatively small. So some scholars argue that maybe India can continue to develop services and then become rich. I doubt about that, because what about there's still so many workers to get a job if you don't expand the manufacturing, and then many people will only have a job. Same with China, manufacturing keeps expanding, but the share of jobs is limited. There's a limit. So the final solution for China is to expand the services to create more jobs. So trade between the two countries will continue to expand, and the trade imbalance has to be resolved over time, and it's getting very serious as the gap between the two countries is getting larger and larger. The major point of growth in the future for India is manufacturing. China, it's really services. For the Indian case in particular, should two countries should figure out a way to allow for market access for Indian IT and pharmaceuticals and so on. Those are really the areas Indian companies have comparative advantage. There's a great potential for bilateral investment. For example, China is undergoing through industrial upgrading at the moment. Also, there's a lot of capital for investment overseas. I think that India could tap into these policy changes in China to benefit from that. I think I'll stop here. Thank you very much.